Good morning, good afternoon, good day. Welcome to my midweek market meeting, 29 September 2021. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I developed. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagar Nandi. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. I use the Q systems for my trading. They work as add-ons to the TradeStation and MetaStock platforms. That was the last slide. Let's continue with a look at the global markets, starting with Australian index AX. Today I'm using all ordinaries AORD. I tweeted a while ago that what I anticipated in the weekend market webinar came true for the markets as well as for individual stocks for the most part. Australian market is one of them. In the last webinar, which was on this day, at the close of Friday, I or maybe the day before that. This is Australian market. Today's market is already closed. So Wednesday closed. Yes. So we had the weekend webinar on the yellow candle, and I mentioned that because it was in a downtrend with lower high, lower low, and the weekly backdrop color was bearish, if price could go down in the daily chart with a magenta candle, that would signal a go with flow trend following short setup, and that happened on Tuesday. On Monday price tried to go up, and Tuesday price came down with magenta candle. That gave the go with flow short setup that I expected and explained in the weekend market roundup. If you took the trade somewhere in the middle of the candle using real-time charts, then you could book profit today when price hit the watermark support level. This trade worked out exactly as anticipated. You could short the Australian index at this point, or you could also short individual stocks. Australian market is now continuing in a downtrend. Topics index, Japanese market. Japanese market was in an uptrend. However, now it is showing up down moves. Sharp down move, sharp recovery, and sharp down move again. These are very extreme moves with large gap ups and gap downs. It will be safe to wait how these erratic moves play out. It's forming kind of box in the daily chart. If it can go below the box, that will be bearish, and if it can go above the box, that will be bullish. Right now it is moving with so many large gap ups and gap downs. I may avoid taking swing trades in the Japanese market. For short-term trading, I will say that it is moving sideways now. Interestingly, the bearish headwind came near the very top on Monday. In fact, on Monday the bearish headwind came, and after that price dropped. As usual, looking at the bearish headwind, one could be cautious with long positions and protect profit in existing positions. maybe using trailing stop loss using the Q protection signal. Japanese market moving sideways. China market CSI 300 index is continuing to move sideways. The daily range is bound by trendline resistance and trendline support. Weekly is the same, continuing to move sideways, no change from the previous webinar's status. UK market FTSE index also moving sideways in a range. There is no change from previous webinar, the weekend webinar. And lastly, India's Nifty 50 index is continuing to remain the strongest of the global markets in clear uptrend, too close to the upper boundary to take new long positions, but it is in an uptrend. That was a look at the global markets. What do we see? We see some deterioration from the weekend analysis. In what way? The Australian market continuing to be in a downtrend. It came down from the swing high in a downtrend. Japanese market status changed from uptrend to sideways. The other markets are remaining same as before, that is UK, China sideways, India uptrend. So we see some change in Japanese market status. It was in an uptrend and now it is moving sideways. Now let's look at the USA market. For that I will switch to TradeStation, use Q Elite. Let's look at the market ETFs, SPY. Here also the market moved exactly as I anticipated and explained in the weekend webinar. In the weekend webinar, I mentioned because the backdrop color was bearish in weekly chart, in spite of a sharp recovery in that week from near the trendline support, because the backdrop color was still bearish, I mentioned that if the daily comes down and gives a bearish flow candle, that would signal a go with flow short setup. And that happened yesterday. If you kept an eye on SPY using real-time charts, then you could short SPY right in the beginning of the day. I did that. I first traded SPY with long put, and by the close of the day I closed profit in many of the long puts and then sold some out of the money puts. One lot for each of the long puts that I continued to hold at the close of the day. So I started with long puts after the market opened using Q fine tune chart, and by the close of the day I am holding long put vertical. So I legged in into the vertical, and that is possible because I use the fine tune chart, and in this case because I was anticipating a go with flow short setup and I was ready to pull the trigger. At the close of the day yesterday, I wouldn't try to short SPY using go with flow short setup for two reasons. One is it was close to the trendline support and it was already below the lower boundary. Using real-time chart you could, and I did short SPY. I am holding a long put vertical in SPY. It is in a triangle, so this is not the time to short now. If you shorted yesterday using fine-tune chart, that's fine. Now you may wait to see if the trend line support in daily is broken before taking any new short trade. Has SPY fallen a lot? We can see that from the expected move range, the weekly expected move drawn on the alternate entry chart. It pierced below the lower expected move and closed also below the lower expected move shown by the dot under the candle. So it pierced below the expected move and closed below the expected move. That is already oversold. It is too late to short. At the same time, you see this was the biggest down move in 3 months while the price was at pendulum high. That most of the time signals more weakness to come. Later on, we look at QQQ. QQQ also displayed this biggest down move in 3 months at pendulum high a few days ago. And after that, the weakness in QQQ has continued. Let's look at that. Let's look at how the Q signals helped us to anticipate a weak QQQ. I tweeted about this bearish headwind in the weekly chart right on the day it appeared in the weekly chart. I tweeted about it, and if you remember, Apple also displayed the bearish headwind on the exact same day. Bearish headwind in weekly could once again capture the very top of the market. And on this day, QQQ had the biggest down move of 3 months. And at that time, I mentioned that happened at pendulum high. So I mentioned that it was a sign of more weakness to come. And that indeed happened. QQQ tried to go up but then fell sharply, closed much below the expected move yesterday. And yesterday, once again, it has a biggest down move of 3 months. That means yesterday's down move is now bigger than this down moves. SPY is now showing this biggest down move of 3 months. QQQ already showed it earlier, that led to further weakness. So I will not be surprised to see further weakness coming in SPY in the coming weeks. May not happen today, but in the coming days and weeks. And if I divert a little bit from the market ETFs analysis, let's look at Comcast, a stock that I shared as a bearish idea on this day. That was the day when it had the biggest down move in 3 months, and it was at pendulum high at that time. And I mentioned once again that the biggest down move in 3 months at pendulum high is a sign of further weakness to come. I shared publicly at the time I shorted Comcast with short call vertical. Price tried to go up and then couldn't go up after 1-2 days, continuing to weaken. And remember, in these days here, the market was recovering, but Comcast couldn't recover, and yesterday market dropped, Comcast also dropped a lot. Once again, I'm trying to make the point that when you see biggest down move in 3 months happening at pendulum high, you may be very careful about that instrument. For Comcast, that technique helped me take a profitable short trade. For QQQ, you could anticipate further weakness to come. That came true. And for SPY, that biggest down move of 3 months at pendulum high has happened yesterday. So it may not be the time to go and jump into buying new stocks. Back to the market ETFs, DIA. This was another instrument where the weekly backdrop was bearish in spite of a nice recovery above the trend line support in the weekly chart. Looking at that in the weekend webinar, I mentioned that if the daily tilted down, gave a magenta candle, that would signal a go with flow short setup, and that happened. Again, you could take a short trade yesterday using fine-tuned chart somewhere in the upper half of the candle. and you would have a significant profit by the close of the day if you used options. I didn't short dia, I took short positions in SPY, didn't want to take shorts in multiple market ETFs at the same time that were moving in sync. But you could choose either dia or SPY yesterday, and these were the instruments I discussed in the weekend webinar as possible instruments that would give with flow short setup. And I said also that IWM I was not going to short. Why? Because it was moving sideways, and at the weekend it closed right in the middle of the sideways range. Yesterday IWM also dropped, however it is still right in the middle of the sideways range. That is a no trading zone for me. So I planned not to short IWM, and looking at today's chart I think that was the right decision. Trying to short SPY or dia was the right decision, and I could make that decision without difficulty using the Q systems analysis. The market is not looking strong, however today may not be the day to short stocks. Why? If we go back again, SPY near trend line support, it has some distance to go, but it has trend line support nearby, below lower boundary. Let me point those. Near trend line support, below lower boundary, below lower expected move. Too late to short. I had shorted yesterday already. I am holding position in that. QQQ broke below trend line support, but already significantly below the swing high, below lower boundary, below expected move. Too late to short. Dia close to lower boundary, not yet hitting the lower expected move. If at all you tried to short, you could look at dia, but I wouldn't do that. Already the reward risk is not attractive. That's why it's not the right time to short dia also. And IWM is moving sideways. So though the market is looking weak, none of the market ETFs are giving a bearish setup for me now. Are they giving bullish setup? Certainly no. Because the biggest down move in 3 months has now come in SPY also, probably more weakness will come along the way. You may look for market or individual stocks that you are looking to short to go up somewhat, and then try to short at swing high, either using daily interval or if you prefer using fine tune chart. Market is weak now. Now what is my market view from this? Weak, but not at a time to short. That time was yesterday. Will we look at the same conclusion after we study Q edge? Yes, I in fact tweeted about Q edge just a while ago. After the weekend webinar, the USA market moved as I anticipated and explained in that webinar. First, it turned bullish on Monday and declined on Tuesday. This is seen from Q edge snapshots. Let's look at them. Remember, in the weekend webinar, I said because of the bullish closure of the weekly candles of the market ETFs that it was expected the market would go up at least somewhat. And this is the Monday's picture. Indeed, that happened after markets close on Monday. The sectors, industries, and stocks were bullish. And if you look at the percentage of stocks above mid Bollinger Band in S&P 1500, they went up by 9%, a significant up move, not small, not extraordinary, but significant up move. And this is exactly what I anticipated and explained because of the weekly bullish candles at the end of the week, that I expect the market to go up at least on the first few days. Now, when Monday closed, it closed bullishly. Was there any alert that it was too bullish seen from bucket analysis? Yes. The percentage of stocks in the most extreme upper bucket jumped from 4%, about 4.1% to 19.3%. That is a jump by more than 15%. That is spending too much fuel too fast to go up. And I have noticed whenever the most extreme bucket percentage goes up by 10% or more in one day, market seems to reverse. That is true for the uppermost bucket. That is also true for the lowermost bucket. So this was an alert, and I was expecting market first to go up and decline. When it went up, it flashed a warning signal, and the next day, yesterday, the market indeed came down. Sector industry stocks were very bearish, and this is after Tuesday's close, yesterday's close. This is exactly what I anticipated, and it happened from the Q Edge sector industry stock analysis. And let's look at the useful, very useful sector industry stock 1 month to 1 day breadth analysis. In the previous webinar, I showed that 1 and 2 day periods were green, and I mentioned it had scope to be little bit more green before turning red. So Monday it had more scope of turning green, it became green, and Tuesday it dropped. This is Tuesday, yesterday. Now the 1 and 2 day periods taken together, that is bearish. 5 and 10-day periods are bullish. 1 month is bearish. So what does it show? It shows that over longer term it is now bearish. Then 5 and 10-day period show it tried to go up within that overall downtrend, and now it is declining again. That may be a sweet spot to look for short trades. Longer period bearish, tried to go up in the intermediate time frame, and now it is turning down again. That may be a sweet spot to look for short trades. That view is also confirmed from market breadth total view. Let's look at that. In the last webinar, weekend webinar, I mentioned that we already had the large distribution count on this day, but that was already oversold. So I mentioned I would look for market to go up, create a swing high that is below the previous all-time high, and then for market to go down again with a large distribution count. Exactly that played out. It created a swing high that is below the previous all-time high, and then yesterday market fell with a large distribution count, and that would be the sweet spot to start looking for short trades. The market ETFs may not give a nice shorting opportunity now unless you shorted yesterday using intraday charts, but individual stocks may be giving many shorting opportunities now. You may keep an eye on that. Now if we look at the percentage of stocks above 50 MA for this market breadth total view, that is calculated using the two exchanges as a whole as well as 4 major indices. In the previous webinar itself, I mentioned the yellow line percentage of stocks above 50 MA was in a downtrend. It was below the midpoint 50% level. It was below the average line. It was bearish, and that became more bearish Monday, Tuesday. We have the large distribution count that is also showing weakness. the 3-month new high low hit the lowest extreme low extreme point from where a recovery was expected. The recovery happened and now it has come down below the midpoint 50% level. So that is also showing bearish inclination but not oversold yet, which would happen if 3-month new high low can come to this point. But it is also bearish, came in the lower half of the 3-month new high low range. Now if you spend a minute to look at not only the percentage of stocks above 50 MA but that above 200 MA and also percentage of stocks at 50 MA is above 200 MA. These are all broad indications and you see all of them are in a clear downtrend now for quite a while. Earlier they were all at or above 80% level. Now the yellow line is only at 30% level. If it hits the 20% level, that will be very oversold condition. From there you may start to look for buy setups in fundamentally strong stocks. What category of stocks are in favor now? Growth versus value. It was going up, so growth was doing better. In the weekend webinar I mentioned it was flattening out and now it has turned down. So growth is weaker than value now. You may avoid buying growth stocks. That is from the overall market perspective. It is in a clear downtrend now, growth versus value. So growth is doing poorly. And small cap versus large cap, it outperformed small cap, outperformed large cap in this area. Then in the previous webinar I mentioned it was flattening out and now it has tilted upward again. So small cap is again doing better than large cap. Looking at that, you may look for buying value stocks and small mid cap stocks, not large cap stocks. The overall breadth analysis is showing weakness. We can see that from the distribution count coming at a lower high, large distribution count. Now let's look at how the mega caps are doing using mega cap top 20 custom index. Mega cap top 20 came down from the middle of the range. It was in the middle of the sideways range in the weekend webinar and I mentioned that was a no trading zone. Now it has come down and hit the trend line support. That is too late to short. If anything, you could look for a buying opportunity if price can go up from this trend line support. On the other hand, if price can break below the trend line support, that will prove very bearish for the mega caps. Right now, it is not a time to short mega caps. And I reached the same conclusion looking at market ETFs. Individual stocks may give a shorting opportunity, but looking at the chart of mega cap top 20 and the market ETFs, you may wait for the stocks to go up little bit and try to short at the swing high. Let's see what is our conclusion from technical breadth analysis from Q Finder. The balance between bears and bulls using technical signals, first weekly interval. This was very bullish earlier and now all signals 58% bearish. Strength is actually more bullish than bearish. That is because of large number of gap ups on Monday. Now I mentioned many times when we see strength is bullish but reversal is very bearish and then compare the actual numbers of gap ups with reversals, if they are comparable as in this case, then together bullish strength with bearish reversal, that is actually bearish. So all signals bearish, strength reversal together bearish, and trend continuation is also bearish. So weekly technical breadth is bearish. Is there any alert from the number or percentage of bearish headwinds in the weekly interval? No, it is only at 0.9%, and I am not expecting a bearish alert from percentage of bearish headwinds in weekly interval because market is not at the top yet. The headwind signal comes at the very top, and it did come and helped us anticipate decline in individual stocks, and it came in QQQ. It might have come in other market ETFs also. The weekly technical breadth is bearish but is not oversold yet. 58% of all signals bearish. It has more bearishness to come before it becomes oversold. What about the daily interval? Yesterday's picture, that is very oversold. 94% of all signals bearish. 94, same percentage of strength signals bearish, 95% of trend continuation, 93% of reversal. That is very bearish. This is what oversold condition looks like in terms of technical breadth on the full market. More than 90% across all categories. Bearish but oversold, you may be cautious. As I mentioned earlier, I am doing this live analysis. I didn't look at the Finder picture earlier, but the earlier conclusion that I arrived at looking at market ETFs, looking at mega cap top 20, that same conclusion I am arriving at from technical breadth also, that it may be better to let the market go up somewhat and try to short that swing high. Market is weak, but maybe too late to short now. Now let's look at some of the stocks that I shared along the way and how they played out. Comcast, I already explained, worked beautifully. The short call vertical, you may still be in that trade. Now let me also share a few trades that didn't work as I expected and how I managed them. Facebook. I saw Facebook giving a box setup and I took a long position. I mentioned that publicly at that time before knowing the result using the box long setup, I think on this day. Then price little bit, very little went up, and yesterday it was coming down. Mega caps were weak. So these are the few things I noted. Mega caps were weak, the market overall was weak, and if you combine the weekly, daily, yesterday in real time it was signaling a go with flow short setup. So Q trading has some very robust proven guidelines. One is how to exit the trades. How to exit the trades? There are three possibilities, or three or four possibilities. One is at the initial stop loss. One is at the initial profit target. Third possibility is you exit partial profit at the initial profit target, then use trailing stop and you hit the trailing stop. That is the third possibility of exiting a swing trade. And there is a fourth possibility, and that was the possibility that I applied on my Facebook long trade. That is, if you have a long trade taken using Q signals, as was true for Facebook, and then it flashes a possible short setup, then we are supposed to exit the trade. No point holding on to a long trade if the instrument is flashing a short signal using Q guidelines, Q analysis. So Facebook did that yesterday in the early morning, and I saw the weakness in the market in the mega cap, both of them. So I didn't hold on to the long call vertical, I exited the trade. It may bounce up from the trend line support, but that's fine. I used the guideline to exit the trade with a small loss. I didn't even wait for price to hit the stop loss if I used Q protection signal for that. In any case, I had a long call vertical So I was not going to exit using the stop loss. I exited using the reverse setup, that is a bearish setup coming in Facebook. I exited the long position. Now let's look at another stock, Rite Aid. When it came to the weekly trendline support and found support, I bought the stock either using long call or long call vertical, I don't remember. And then price tried to go up on Monday, but closed with a bearish shape candle, very long upper tail. I was keeping an eye on the stock. I think I had naked long call also in this case. I was keeping an eye on the stock using fine tune chart yesterday. Monday's bearish shape candle was telling me not to hold on to the trade if it goes down. So I exited RAD long position yesterday using fine tune chart at small profit, almost break even. I didn't want to let it turn into a loss, so I exited it with a very small profit. If it goes up again and gives a bullish flow candle, then I may consider buying it again. But right now market may not be the in a state where I'd like to buy many stocks. This is a defensive stock, but still defensive doesn't mean a bearish market is a good time to buy defensive stocks. It's best to wait the market out if you are only willing to take long trades. Just defensive stock doesn't mean it's a good buying idea in a bearish market. Market is not bearish yet, but it's weak. So I exited RAD in this way using a having a small profit, and I did the same thing for Cheesecake Factory. The Cheesecake Factory gave a long breakout setup on this day. I found it after market close, so I took a long position next day using stock. This stock also on Monday displayed a bearish candle with bearish indecision at the top. So I kept an eye on the stock on Tuesday. As it was coming down, I exited the trade with a small profit. It was already above upper boundary to extended. Usually a stock doesn't stay above the upper boundary for long, and in this case we had very bearish shape candle with indecision at the top, so I expected it to come down. So that happened. I exited it with a small profit. If it comes down and gives a bullish flow, I see the weekly is still bullish in color. If it gives a bullish flow candle, that will signal the next go with flow short setup. Sorry, next go with flow long setup after a breakout from this base, which is in fact you may say like a cup and handle. So it may be a cup and handle breakout. That is of course happening not after an uptrend but after a downtrend, and I like that. In fact, weekly may also be having a cup and handle happening after a downtrend, not the IBT style exactly, but I love these patterns. It broke out, I took the trade. If it continued to move up, I would hold on to the trade, but it didn't. It flashed warning signals. I exited with small profit, and now if it pulls back little bit, goes up again, that will give the first textbook, you may say, first textbook go with flow long setup. So I'll keep an eye on that. It's a very strong stock fundamentally. I'll like to buy it again if I get the next go with flow long setup. Now when I exited Facebook with a small loss, I used intraday charts during that time. At that time the mega caps were weak. I took short trades in multiple mega caps. Microsoft was one. Remember this day, this was the day when we had the biggest down move in 3 months in QQQ. And Microsoft also broke below the sideways range, below this watermark support on this day. Then it tried to recover and stopped near these direction lines. When three direction lines come together and they all tilt down, that is a signal of possible weakness, impending possible weakness. So right at this point, not at the top candle, probably the next day, I shorted Microsoft using short call vertical. And when price came down yesterday, came below the lower boundary, far below the lower expected move, I had more than 60% profit in the short call vertical, so I didn't wait. The typical profit target is 50% of max profit. It is looking very bearish, but it is also looking very oversold, and verticals can erode profit quickly. They take time to expand. Here I had profit expansion quickly because price dropped a lot. If price recovers, I'll lose a lot of that percentage profit. So yesterday I had more than 60% profit in short call vertical opened at this point. And once again, I used this breakdown and recovery to three direction lines that started to tilt down together. In addition, I saw weakness in mega caps overall. I shorted it and I booked profit yesterday at more than 60% of the max profit. Apple was another stock that I traded once again. And remember, I mentioned when QQQ displayed the weekly bearish headwind at the very top, Apple did the same and I shared it at that time using live market analysis. Now, Apple also had a big down move, went below this watermark support, recovered. And remember again, this big down move was when QQQ had the biggest down move in 3 months, recovered. All the direction lines, the three direction lines were tilting down. So I shorted Apple also using short call vertical at this point, and yesterday I booked at least partial profit. By keeping an eye on the mega caps, I had a long position in Facebook. I took loss in that, but I made up for that loss, more than that loss, from the two short trades in Microsoft and Apple. Now let's look at the two airline stocks I shared earlier. Hawaiian Airlines. First, I started talking about the stock in this area. At that time, there was a trendline resistance. In the previous webinar or webinars, I mentioned I took a long trade on this day. In the weekend webinar, I mentioned though it was at the upper boundary, I was continuing to hold on to that stock. Then I saw Monday, it had a bullish move, but long upper tail in decisive shape candle. And yesterday price tried to go up and it was reversing again. So I closed my Hawaiian Airlines long swing trade that had a stock long position. I exited it yesterday. It may go up again, that's fine. I will look to buy it again when it gives a go with flow long setup. That will happen if price can come down little bit and go up again with a bullish flow candle, and that will be the once again textbook example of first go with flow long setup after forming the base. So I took a breakout entry, and the next entry will be the first go with flow long trade after the base formation. So I'll keep an eye on that. I closed Hawaiian Airlines yesterday with a nice profit. Now Sky West. First I shared my bearish trade on this day that was using short put. Then on this day I shared publicly, I closed the short put and took a long position. In the weekend webinar we were here, I mentioned that it was near the upper boundary. My resistance was covered, but I was holding on to the trade. Then on Monday it went up but closed higher, but closed with indecision at the top and a bearish shape candle. Tuesday price tried to go above Monday's close, but it was reversing. Using fine tune chart, I closed my stock long position in SkyWest. If it comes down little bit and goes up again, probably from the trend line support, then I would not mind looking for the next long setup in SkyWest. Two more stocks and four more instruments to discuss. ExxonMobil had a breakout setup on this day. That was the day the signal came in QSonar QFinder. I took a long position next day, and as I mentioned, I took it using naked call. Not usual for me, but I took it using naked call. Very next day price gapped up, and I shared publicly once again my naked call options had more than 50% profit. That is the initial profit target for option trades for me for swing trading. So I have booked at least a partial profit in ExxonMobil long call options at 50% of the profit. Yesterday it closed higher but with indecision at the top. If it comes down, I'll make sure that the rest of the positions also exit with a profit. I have already booked partial profit at least at 50% of the profit. This trade also worked out as I expected. One more stock that I discussed in the previous webinar. Previous webinar I discussed about 10 stocks. I am reviewing all of them now. SSB, a banking stock. All these stocks I bought, they were fundamentally very strong. They were at a lower price level. I think it had a breakout setup on this day. I took the long position next day using fine-tuned chart soon after the market opened. Then it went far above the upper boundary. Remember, this was a breakout long setup, not a go with flow trend following long setup. So it went up, went above upper boundary. Yesterday it created a doji candle, and more importantly for me, Q traders, indecision at the top. So I booked profit in my SSP trade also. It also covered more than risk resistance. It is overbought with indecision at the top signal doji candle, and if you look at the alternate chart, it is above upper expected move for 2 days in a row. So I had anyway covered the risk resistance, so I booked complete position profit in SSP. If it pulls down now and goes up again, that will give the first textbook example of go with flow long setup after this long downtrend. So I took a breakout setup. Next setup after the pullback will be the go with flow long setup. So I will keep an eye on that. Now two more instruments I want to discuss. Growth ETFs. One is ARKK. And I know a few weeks ago, all the growth traders were excited because growth stocks were starting to go up, and they did go up. Now let's see how using Q charts you could be cautious, and instead of buying you could book profit at the top. That would be for ARKK on this day when we had indecision at the top plus a bear release signal came at watermark resistance from where price came down multiple times. So if you had growth stocks or ARKK innovation kind of stocks, you could book profit in long trades. When could you take the long position? That would be using the bull release signal at the lower edge of a sideways range. So you could buy at the lower edge of the sideways range. Unfortunately, IBD style traders don't like to buy at the low point. IBD talks about breakout trade. So when it tried to break out, maybe that was the time people would like to buy if they are using IBD style. Individual stocks might have broken out better than ARKK did at this point, but that was the worst time to buy using Q methodology. Instead, you could protect profit at minimum in existing long positions, or if I was trading ARKK, I didn't. But if I was trading, I would like to take a low risk short trade, probably using short call vertical. I didn't. But that worked beautifully. And that was true for FFTY also, IBD 50 ETF. I remember when it broke out, many IBD style traders, for good reason, these breakouts as per IBD are supposed to work. So it broke out, and many IBD traders might have bought stocks at this point. But Q traders don't like to buy breakouts when the stop loss is so far away. Instead, you see this long-term trendline support. Looking at that, Q traders should buy at this swing low. And when it hit the upper boundary, they would start to book profit and put trailing stop on the remaining position. Now, you see how it could be shorted also. Let's look at that. It displayed a bear release signal on this day. However, that candle was green candle, so you don't like to short on that day. And also that candle was still above the watermark resistance. Then very next day, price closed below watermark resistance, creating a false upside breakout, not only in the daily but also probably in the weekly interval, false upside breakout at this watermark resistance. So on Monday, in fact, using real-time chart, you could at least protect profit in FFTY or underlying growth stocks, or you could even take a short trade. You could protect profit in long positions or could take a short trade. And yesterday it gave much more than the risk distance in the trade, so you could book at least partial profit. It is far below the lower expected move, far below the recent swing high, so this is probably a bit too late using my methodology to short. But here also I see the biggest down move in 3 months coming at pendulum high. That is usually a sign that more weakness is going to come. But it is now oversold. I will wait for it to go up little bit and come down again. And if that happens, that will be a textbook example of a go with flow short trade. I see the weekly is already bearish. If price recovers and gives a bearish flow candle, comes down from there, that will be the first go with flow short setup after this long up move. We may keep an eye. These trades, whether the textbook long trades at low price or textbook short trades at high price level, they are all low risk opportunities. And I shared a lot of trades in the previous webinar or webinars, and today I reviewed all of them. You notice few, at least one actually. FB Facebook I exited with a loss. I didn't take a loss in a single other trade of all the trades that I discussed in the previous webinar, in spite of market's sharp reversal. Why was that possible? That was possible because I bought the swing lows or breakouts, but breakouts were not having large stop, wide stop distance. Today I'll not look for more trades. As I mentioned, it may be a bit too late to short. I am holding one short position in SPY. I'll see how that plays out. That short call vertical already has 25% profit. So I don't think I'll let it go into loss. I'll keep an eye on the market. If the market recovers a little bit, that may actually give a sweet spot to short stocks again. When I see opportunities, I'll tweet about them, at least some of them, and I'll also try to post on my forum. Let's end today's session here. Thanks a lot for attending. I look forward to seeing you in my next session. The usual public next webinar will be during the weekend. I look forward to seeing you there. Thanks once again and trade profitably.